Mukisa Kitui and discussed with him many ways which mobile can contribute to sustainable development. Here is our interview.
Hello there and welcome to KTN News. Of course, it is Africa E-Commerce Week, and at this hour I'm joined by the UNCTAD Secretary General, Dr. Mombasa Road. Of course, UNCTAD is the United Nations Conference on Trade and Development. And at this hour, we're going to talk more about mobile money and how it has transformed, the lives of people, especially in sub-Saharan Africa, and how it has contributed to sustainable development. Mombasa Road, good to see you.
Most my pleasure.
Welcome to the program.
Thank you.
I was tempted to say Waziri because, of course, you served as...
most Kenyans call me that.
Oh, they still call you that.
Yeah.
Welcome to the program. So let me just begin with the first question, which has everything to do with mobile transfer and perhaps how it has transformed the lives of people in sub-Saharan Africa, especially those in the rural setup.
All right. First of all, we must understand that there is no uniformity about the impact of mobile money in Africa. Of course, you know that Kenya was the first country in the world to develop mobile payment system on mobile phones. And today, the aspiration for Africa is that by the year 2022, 50% of African adults will have a mobile money account. Kenya is at 73% already. So you can see the difference between Kenya and other areas. But having said that, there's a clear drift and a trend that we can appreciate. Originally, mobile money was a payment system for sending money to someone. But there has been exponential spin-offs, development on what you could do with the financial services on your mobile phone. From ease of e-commerce, that you can order and pay without going to a bank, without waiting for physical money movement, has been a major phenomenon, and cutting down the cost and the time it takes to transact financial services. This is important. Inclusion of persons without account is of course important. And there's a whole lot of what mobile money can do, but there are a number of challenges. First of all, is that the physical, geographical coverage of mobile money in Africa remains very modest. In most countries, it's still a phenomenon they hear about. Secondly, there is limited infrastructure for cross-border mobile money. And the Francophone is the zone of Western Africa. Orange Pay has made it possible to, because they have a common currency, to transact across borders of a number of countries. But broadly, apart from some solo experiments by Orange and MTN in one place in West Africa, Safaricom and MTN in Eastern and Southern Africa, there has not been a comprehensive development of a cross-border payment system using mobile money. If you could unlock that, it has a phenomenal potential, particularly areas integrating like East Africa, the possibility that you could procure virtually, electronically, services out of Uganda and make that transaction paid for on your mobile phone can go a long way in integrating the regional markets. But many times we talk about the importance of financial inclusion because of mobile money, but we should not get carried away. First of all, the ability to pay is not just about the technology of transferring money. It's also about disposable income. And that means that while we develop the platforms for ease movement of purchasing power, we must build purchasing power. We must invest in productive capacity to create the services and products which you sell electronically. Secondly, every opportunity comes with the challenge and the potential of abuse. We have seen, for example, in Kenya, the ease with which you can borrow money, microfinance on your mobile phone is allowing people to borrow money to gamble. That you borrow money on your phone and you bet. For some reason, some people delude themselves that betting is an investment. And many people can be bankrupted by the technology that makes it easy for you to move money. So we have to be conscious of that. Maybe there should be a role of regulators in many other jurisdictions. Governments set a limit on how much somebody can bet on the basis of their income to avoid recklessness. But this is a phenomenon that regulators must achieve. But fundamentally, the phenomenal demystification of retail banking that has come with the mobile money is a pointer to what liberative capacity technology have for Africa's development.
Okay, let's talk about the unbanked population. These are individuals who perhaps don't have utilities, who don't have, papers, the right papers, or perhaps they avoid the bureaucracies that is associated with opening up a bank account. And most of these people who are in rural setup, again, have decided to, join these various mobile transfer platforms. So perhaps can you say mobile transfer or mobile money is key to growing the banking sector in Africa?
Yes, the banking sector is a basket of services. There are some things you can transact through mobile money, but there are certain other ones that you definitely need physical banking services, long-term money, for example. So the linkage between fintech and normal traditional banking is important as part of the development of Africa. But I think it's also important that we hasten with caution. While it's important to say there's financial inclusion and the possibilities that have come with the payment system that is in your mobile phone, there's also a reality that microcredits from mobile services is more expensive than most money that you can borrow. Yeah, so then people who are borrowing a little money are actually paying a higher interest rate than people who are the richer. And so that's the irony. So they have access to credit, but it is still comparatively expensive credit.
Okay, we've already appreciated the fact that mobile transfer contributes to sustainable development in this continent. But I'm sure what our viewers would like to appreciate is for you to tell us the link between women and mobile money.
Okay, let me give you an example from the country you and I come from, Kenya.
Yes.
Not long ago, any woman who milked her cow and delivered milk to a collection center delivered that milk on the account of her husband. Because the address of the owner of the farm is the address of the produce. Similarly, a woman produced vegetable, produced coffee, produced arrowroot. If it is delivered into a market where you will be paid later, it is delivered in the name of your husband. The reality is the men owned the proceeds of the labor of the women. Mobile money has allowed that a woman who delivers any product into the market receives payment to her account on her phone. The impact of that in family livelihoods is phenomenal. So financial inclusion, particularly for rural women, is important in a way that you could not have imagined. The low cost of transaction through mobile money has allowed for paying a minimum pension for elders in the country in a way that would have been impossible. Imagine if you are sending 2,000 shillings to a chief in Turkana for some old person in Lorugumu. That money will never get there, or if it does, 1/10 of it will. But you now have a situation where government can make the disbursement directly without going through intermediaries. So that's phenomenal. Number three, increasingly as we look for regional integration, we talk about procuring services or offering services away from where you are with as few intermediaries as possible. The fact that now you can transact and acquire inputs in your farm, you can use your mobile phone to see the comparative prices of farm produce in the different towns, allows you to make management decisions at the micro level in the small holding that have impact on your livelihood.
Yes.
This market intelligence was not possible, was never facilitated without the arrival of this payment platform.
Yeah. You've already talked about Kenya. In Kenya, we have Safaricom, which owns M-Pesa. We have MTN, which is mainly active in West Africa. We have Tigo in Tanzania. There's so many service providers who've decided to engage in mobile money transfer-related businesses. So what would you say the future of mobile transfer? How does it look like in this continent?
There was a bold decision which was made a few years ago by the presidents of East Africa to give a sunset clause to roaming charges between the telephone service providers in East Africa. That was long before the European Union decided to do something similar. We just came into force this year. And it has been phenomenal to cut out the totally unjustifiable high costs of telephony within the region. A similar political will by the political leaders in the region or across Africa to put their attention in support to telecoms and fintechs on creating a limited number of wallets for cross-border transaction is possible. It cannot just be led to the corporates to work it out. it is time for the developmental state to address what are the challenges and how can we use available technology to erase monetary barriers between our countries for ease of e-commerce between us.
Yes, and speaking about integration, I think most African countries have now appreciated the need to come together, in order to improve intra-Africa trade. And of course, they're also coming up with, economic blocks like the East African Community, the ECOWAS, and the rest. Do you think these economic blocks might come in handy in, promoting mobile money transfer?
The traditional blocks of EAC, COMESA, SADC, ECOWAS have not been very, very good blocks for interlocking for the purpose of Africa's integration. And that's why you see that while we are training at regional group level on how to start engaging and locking up services and goods trade, fundamentally, we have to look at the scale of the CFTA as a whole to address what does it take to integrate, to lock up our cross-border financial services. Why does PayPal manage to cross our borders and our own fintech companies are inhibited or have not been able to break through in a similar way? This is a conversation that's not only important for Africa's integration, but it's important for easing the cost of remittances from Africa's internal diaspora. Many times we're addressing the diaspora of Africans living in Europe and the Americas and the Middle East, but there's a reality that the largest African diaspora is in Africa. And they may have smaller remittances, but an UNCTAD study we published showed that they have phenomenal remittance power. And many of them, particularly the women migrants within Africa, send small amounts of money, but very regularly and very important to families at home. Now, if we do not have a proper mobile payment platform, a lot of the resources they are trying to remit to their families are eaten up by the cost of transaction. So we must start looking at the interoperability of financial services provided by mobile companies in Africa as another way of easing the cost of diaspora remittances from within the continent.
You've already mentioned some of the challenges that affect mobile money transfer, but I think there's one thing that you've not talked about, that is mobile money fraud that mainly affects, especially the illiterate in rural setup. So what do you think needs to be done to curb and perhaps
I'm not looking into, but we've been saying that every opportunity always comes with challenges.
Yes.
And one of the challenges, beyond just mobile money, the challenges of the digital economy is digital fraud, particularly identity theft, falsification of identity, data privacy breaches. There are so many challenges, but we don't want to send mixed messages. We want to send a message that first and foremost, this is a positive, but in that positive, we have to start also addressing the strength of regulators to understand the phenomenon they're dealing with, particularly for purposes of fair competition, consumer protection, and integrity of transactions. So there are challenges. Fraud is a reality. But the gains are so high that the risk of fraud should not be a reason for us to be scared away, but to look for the best ways to deal with the fraud.
Of course, it's good to be optimistic instead of being pessimistic. You've already talked about the need for Africa to integrate, and this comes at a very interesting time. Of course, we have the East African Community that is up and running. We have ECOWAS, SADC, all these economic blocks in Africa. But this is happening at a time when, for example, in Europe, we know the issue of Brexit. Theresa May survived a no confidence vote just the other day. So would you say Brexit and perhaps the United Kingdom leaving the European Union will have some negative effect on, economy, not just in Kenya, but in Africa, because the United Kingdom remains one of the main source of FDI, and of course, they have a lot of investment in this country, in this continent.
The conversation that is leading to some countries trying to pull out of EU are reasons why they cannot apply to Africa. One of the emotional drivers of Brexit was the fear of African immigrants. Now, I don't think that fear of African immigrants is going to impact African policy. So that conversation is alien to us. But having said that, the growth of economic nationalism and particularly populist parties in Europe and America has a lot more to do with an unequal globalization. where the rewards of global integration were not geographically and even domestically equally beneficial. So the fear of declining middle classes has fueled that populism and the embrace of economic nationalism, which is looking backwards. But some of us think that this is a temporary phenomenon, it's a passing phase. Particularly when populism will be demonstrated that it does not answer the fears that led it to political power. But secondly, when you see the reality that at the core of populism right now, particularly in government in the US, for example, is a technological competition with China. The sense that we brought China in to open into the world market because we thought that when capitalism grows, the Chinese capitalists will be the grave diggers of communism. 20 years later, they have become the largest trading nation in the world, but the Communist Party has also become stronger. So the scare of a failed defeat to communism sometimes is disguised as a competition on other areas. So now we see this as a reality, the more we know how to deal with it as a phenomenon. But Africa is not going in that direction. Africa has been looking inward for too long. And it knows that that's not the direction to be in. It is embracing each other, addressing the potential and opportunities that come with regional value chains, looking at how to integrate and have larger investment areas by being a larger scale. That narrative is likely more optimistic than the message of nationalism and assumptions that you can turn your back to the rest of the world.
So African economies should not panic.
Economies never panic, but Africa is moving in the right direction.
Okay, fantastic. As we conclude, I mean, you've already talked about the opportunities that are there, the mobile money platform. You've already given us the link between women and mobile transfer. Perhaps are there other special groups who might get advantage out of this? The
reality is that the most innovative people who are playing in the digital economy space are youth. I run a program which I started with Jack Ma, where we recruit young men and women whom we call netpreneurs and send them to the Alibaba campus in Hangzhou to see in practice how to construct electronic market visibility for small business, and also visit Taobao villages on seeing how Alibaba has linked small-scale rural producers to global markets. And we think our next phase should be, how do we now move this as an opportunity to unlock the potential of these young net entrepreneurs to create jobs,